So I'm Peter Hinton, the CEO of Summit Development Group, SDG. I'd just like to take a couple of moments of your time to talk about who we are and what our vision is in Africa. We are looking to become the #1 small and medium-sized enterprise bank in sub-Saharan Africa. And what we're looking to do is basically take $125 million of capital, invest that in 12 banks and financial institutions in Africa, bank 5 million previously unbanked people. More people have a mobile phone than have a bank account in Africa. So we see that as a marvelous opportunity. We also want to lend money and provide financial services to small and medium-sized enterprises, which in turn will create 1.4 million jobs, because as those small businesses grow, that creates employment, and provide a return of over 20% in dollar terms to our investors over a 10-year period, thereby transferring $125 million into $600 million, as well as have a development impact. So let's look at Africa in a bit more detail. Kofi Annan has recognized that Africa is a huge profitable opportunity, and he says one of the best kept secrets in today's world economy. Now, with America and Europe having slower growth and post a credit crisis, people are increasingly waking up to this opportunity, and that's where we operate, and that's where we see a great investment opportunity for ourselves, but in particular within the financial sector. So let's look at the countries that we focus on. These are our 12 priority countries, ranging from Ghana, which the IMF this year, 2011, is estimating will have a growth rate of 14% in GDP, down to Sierra Leone with 5%. So you've got a situation where African economies are projected to grow significantly. And this is after 10 years of constant growth. Most economies in Africa have been growing at between 3 and 5%. If one looks at the banking sector in particular, typically banking assets grow at 3 to 5 times the average GDP growth rate. So taking 3 as a multiple, that means that the banking assets in Ghana should grow at 42% this year. Banking assets in Sierra Leone should grow at 15%. That is a significant growing sector of the economy. And what we want to do is focus on that and service part of that sector which is currently underserved. So if we look at what traditional banks are doing at the moment, a traditional bank largely services the large corporates and consumer banking. And with the large corporates like MTN, a big mobile phone operator in Africa, they lend large amounts, $1 million plus. At the other end of the spectrum, you have microfinance institutions such as CARE, on average lending $100 to micro enterprises, largely women. What we want to focus on is in between the two. These are small growing businesses which on average want to borrow $20,000 to help expand their business. That part of the economy is not currently serviced. If we look at that in a bit more detail, here's a typical garage owner. He borrows $20,000. That is repayable over 2 years. Typically, they repay it over 18 months and come back for more. And as the profit grows, as the turnover grows, employment grows by 30%. And what's interesting is, when we've done this before in East Africa, 40% of those businesses are women-run businesses. And that is where we see a phenomenal opportunity across Africa, and that's what we service. Now, what's interesting is McKinsey looked at this sector in 2010 and quantified that small business credit demand at being around $130 billion. That's the market for SME borrowing, $130 billion. They quantified that only $30 billion was currently serviced. That leaves a gap of $100 billion. International players find it difficult to access that market because they're far away physically, and it's very difficult to lend $20,000 from New York or London to SMEs. Traditional banks aren't very interested because they're profitable enough as they are. We'll look in more detail in this later, but at the moment, they don't really see this as interesting, and also it's seen as risky, so they don't go there. This is where SDG wants to operate and play. We want to service that missing middle. So let's look in a bit more detail at what banks are currently doing and where we would like to play. So traditional banks, what they do is they normally borrow money from depositors at around 2%. They lend to the government by putting money into treasury bills at 12%. They lend to the MTNs of this world at, say, 15%. They also lend to high net worth individuals at 15%, and they make decent profits. And interestingly enough, profitability of banks is significantly greater in Africa than other parts of the world. That's what they currently do. What we're looking to do as SDG is borrow at between 2 to 4% from depositors in the countries in which we operate, lend to governments by putting money into treasury bills, lend to corporates and high net worth, because we still think that's a good business to be involved with. But very differently, we actually want to service small and medium-sized enterprises that we can lend to at around 20%. We also want to bank the unbanked and provide them not necessarily with lending services, but with just straightforward financial services and a safe place to keep their money. More people put their money under the mattress in Africa than into a bank account. And we want to provide affordable housing finance because, again, the ability for people to borrow money to buy their own homes is very limited in sub-Saharan Africa. So let's look at a bit more detail about what we're trying to do. Traditional banks, when they lend money to small and medium-sized businesses, normally go through a whole process, but they primarily focus on credit history and also collateral. If small and medium-sized businesses don't have collateral, traditional banks are not normally interested in lending them money. What we want to do is lend small businesses that money by managing the risk appropriately. You cannot manage lending to small businesses in the traditional banking way. What you have to do is look at two key things. One is cash flow and one is character. Does the cash flow of the business that you're lending to, is it sufficient to repay the loan and service the debt? Secondly, is the character of the business owner one that they will repay you if they've got the cash to do it? And that's what we really want to focus on, but those skills typically are not present in banks in Africa, so we have to build those skills. The other thing we want to do to actually manage the risk of lending to this small, medium-sized sector is partner with local and international people, NGOs and also universities and training bodies that can actually support those small businesses in giving them the skills to be stronger. And those skills largely in the areas of financial literacy, improving their operations, governance and mentoring, and how they retain and reward staff as they grow. We want to play a role not just in giving them finance as small businesses, but also giving them the skills to run their business better. That way, we'll manage the risk in a far stronger way and also create far more jobs. So to summarize what SDG is all about, we are looking to take $125 million, invest that in 12 banks in sub-Saharan Africa, that we then focus on the missing middle, on the and we want to bank, as a result, 5 million previously unbanked people, often employees of those small businesses. We also want to build up a portfolio of SME lending of 3.8 billion, which represents lending to 190,000 small and medium-sized enterprises, a significant number of whom will be women-run enterprises, create 1.4 million jobs, give an investor return of $600 million, which is equivalent to an IRR of 20% plus. Do we have the people to actually realize this vision? At the moment we've got 6, but we're at full capital of 125 million. There'll be 11 professionals on the team, a combination of private equity professionals and bankers who bring their experience to bear on the 12 underlying financial institutions. That brings together 65 years of private equity experience. That brings together people who've done closed and worked on deals of over 59 in total. It also brings 90 plus years of banking operation experience, and it also brings together 98 years plus of African experience. We have a multinational team to actually help us realize this vision and execute it. In addition, we built up over the years through our networks and contacts a whole pool of talent of over 41 individuals who, with the right opportunity, will come on board as heads of marketing, finance directors, treasury, lending, credit, operations, internal audit, and so forth, to actually be part of the executive management teams in the banks in which we invest. And these are people who run banks in East Africa, West Africa, Southern Africa. We know them, they buy into our vision, they want to be part of this, and at the right moment they'll leave their larger banks or local banks that they're with to actually be part of SDG. That's what we find exciting. That's why we feel we can deliver the returns that we're looking to achieve. Do we have the opportunities? The opportunities we've currently got are represented by this map. That equates to $375 million worth of investments. We're looking to do approximately a third of that. However, the pipeline that we've got is in 41 entities, 17 countries, and that's really where we can see the opportunity. Those opportunities are there today. They may not be there in 2 years' time. We want to start making investments as soon as possible. And what we're looking to do is deploy $40 million in the next 6 months. We have deals in East, West, and Southern Africa that are ready to go in terms of starting to deploy capital and start the process of transforming those banks to focus on the missing middle. So let's look at one particular opportunity that we have. This is Ghana. We're looking at a bank which is the 22nd out of 26 banks in that country. It has $265 million of assets. What we're looking to do is invest in that bank, train 300 loan officers in how to do successful small business lending. We also want to take a portfolio currently at $150 million and turn that into $850 million. We also want to create 215,000 new jobs through successfully lending to small and medium-sized businesses. And we want to take a profit of $3 million today into a profit of $40 million by 2017. That's an example of a specific opportunity in one country. That helps achieve what we think is the missing middle and what McKinsey relate to of the $100 billion gap in small business finance in Africa. By doing that successfully and by managing that risk successfully and by doing it with the right people, we're looking to deliver a 20% dollar IRR. That will be achieved by servicing this missing middle and doing it properly, and also strengthening those small businesses in terms of their financial management of their businesses and also operation efficiency. That in turn will create the 1.4 million jobs that we believe is achievable, as well as the dollar IRR return of over 20%. We'd love to hear from you if you feel you can play a part with us in achieving this vision, either in the banks in which we're investing, either with the small businesses that we're looking to strengthen, and also if you feel that this is an investment opportunity that you'd like to explore. We look forward to hearing from you. Thank you.